Over the years, I've added more steps and methodologies to my trading process, but if I had to cut it back to just two, I would pick daily bias and daily cycles. They go hand in hand together, and I strongly believe that if you were to just use those two things, you could still generate consistently profitable results. So today, we're going to go over some examples of them working beautifully together. So let's get right into it. So this first example I want to go over is on gold from the 13th of December. So we'll start with the higher time frame bias, and I actually had to rely on a couple of different things on this example because on the weekly we were in a consolidation, right? Price came into this bullish FVG, then we were meant to ideally expand to the upside and target some external range liquidity, right? But as you can see on the way there, price got trapped in this FVG, right? It failed to get through that FVG twice. So from there on the weekly, I wasn't 100% sure. So the confluences that I relied on instead on the daily were a mix of weekly cycles and external to internal range liquidity. So we had Monday, Tuesday, Wednesday expand to this high up here, which is external range liquidity. Then we had an extremely bearish Thursday. So in terms of weekly cycles, this is one that I look at as a Thursday reversal, where essentially Thursday will reverse and then Friday is a really good expansion day. So we had that on our side. And also if I go onto the 4 hour, you can see that we actually gave a 4 hour CSD, okay? Price formed this bearish order block here, which shows me that the 4 hours in a sell program, right? The 4 hours bearish. So ideally we're gonna go and target some internal range liquidity after taking out this high. So the internal range liquidity, the only internal range liquidity in this leg really is this bullish FVG. Right, on the daily, we have a nice bullish FVG. So that was my bias. I anticipated Friday to play out as a sell day in line with the weekly cycle to target the internal range liquidity. So from there, all you have to do is go on a lower time frame and identify a daily cycle. So potentially when you jump onto the intraday chart, you would be looking to sell from this 1 hour FVG, okay? And because we have Asia as the liquidity within the zone, potentially you would be waiting for London kill zone to take that out and form that London protraction cycle, okay? And that's the beauty of these cycles, right? Either fits the criteria or it doesn't. You can see that London just continued to expand to the downside, so you wouldn't have got caught out or been forced to take a trade that's not A+, right? It either takes out the liquidity and gives you your entry or it doesn't. So you'd just be sitting on your hands. London expanded to the downside, but you can see that we still didn't reach this target by the end of London, right? Which tells us that potentially New York is going to continue this move. So you could now look for that New York continuation cycle. So we have this 1 hour FVG here. For this cycle to play out nicely, we just want a retracement, early New York, and then an expansion to the downside once you get your entry, okay? So if I jump on the 15-minute, play this out a little bit, you can see that we do retrace into that 1 hour FVG. If I put the kill zone on, you'll see that that is early in New York. We take out this old high. So we're now forming the start of that New York continuation cycle. We've had the higher time frame bias. Now we're just waiting for the cycle to present, and currently it is presenting. If I play this out a little bit more, you can see we do actually get that lower time frame change in state by price forming this bearish order block. So once you see this, right, and the cycle's playing out, that's when you go and grab your entry, right? You didn't need to rely on anything else other than daily bias and daily cycles, and then whatever entry protocol you decide to use. So if I play this out, we tap the entry up here, and then we target this daily FVG. So we complete that daily bias, right? So that's perfect. Now this next example I want to go over is on the dollar index. This one, the higher time frame bias is a little bit different. So we have multiple time frames in line. If we look at the weekly, we've been printing consecutive bullish candles, respecting all the bullish arrays, right? We respected this FVG here, and price is clearly headed towards this external range liquidity up here, which is actually the previous year's high. So we have a clear external range liquidity target on the weekly. If we go on to the daily, it's also clearly in a buy program. If I play out the few days before this example, you can see that price has respected this FVG here. And if we actually look at the days of the week, right, this is Tuesday, Wednesday actually formed a low, and Thursday expanded as well. So this lines up with one of my other weekly cycles, where essentially Friday is another high probability expansion. So all we're expecting for the bias is another bullish day to target that higher time frame external range liquidity. So now we can go and look for that daily cycle. Cool, so here on the 15-minute, we have the intraday price action. Now down here, there is a 4-hour fair value gap. If you want to go back to this day and check it, you can. And essentially you can see that we've had a big aggressive move from London session below Asia's kill zone. So once you have that daily bias, you would simply be waiting for a daily cycle to line up with that bias. So see how price had formed a high up here in London kill zone. Price had actually taken out this previous day's high. We were above Asia. So potentially, if you weren't using daily bias and you just went off daily cycles, maybe you would be convinced that price up here was going to hold and he was actually going to get a bearish London protraction cycle. But that is why daily bias goes hand in hand with these daily cycles, because you would understand that this move down here isn't in line with your very, very clear higher time frame bias. So you would just look at it as like a session power of 3, and you would anticipate this to just be a manipulation. So once we get that manipulation below Asia liquidity, we have another old low down here. Price is now likely to go to your actual higher time frame bias. Now we have the liquidity sponsor. So if we jump down onto the lower time frames, your entry again is very, very simple. Once you have both of the other things in line first, you do the higher time frame bias right, you get the daily cycle right, the entry is super, super easy, and we have a bullish 5-minute order block that gets formed here. That is the change in state. That is the only confirmation that you really need. And yeah, we can put your stop loss at the low. Target can be London high here if you want to be conservative with it. But we know that we have this higher time frame target up here, right? That weekly external range liquidity. So you can very, very easily just play that as your target. And if I let it play out, it gets smacked and we run even further. So that was another beautiful example. Cool, so we're on EU and we're just going to go over that higher time frame bias first. So if we have a look at the weekly, price took out this external range liquidity down here, right? That's a major level of liquidity, and then returned to this bearish weekly FVG. Right, so we've gone from external back to internal range liquidity. So now it makes sense to get an impulse back towards some kind of external range liquidity, right? So this low would just act as a magnet. Now, if we jump down onto the daily time frame, you can see that the days leading up to this expansion, this is the 11th of December, by the way. We have taken out liquidity into that weekly FVG, right? And then following that, we actually had the swing point. So we have this 1, 2, 3 candle formation. That's a swing point. Again, that's a good sign. It tells us that the next following days should be bearish until we reach liquidity. Okay, if we look at the weekly cycle, Monday and Tuesday impulse lower. That's a classic sell week. So Wednesday is another high probability expansion. So what we're expecting for the next day is a move lower in line with the swing point, the weekly cycle, and to use this low here as a magnet, right? It doesn't have to reach that on the specific day. It just has to go in that direction. So here on the intraday chart, you can actually see that we had a big impulse lower in London kill zone. Now this is a bit of a different daily cycle that I'm not going to get into today. But essentially, we still have liquidity targets, right? Price didn't reach these equal lows. We still expect a bearish day to form. So even if you weren't in on this London move, you can still expect lower prices in New York, okay? And if we actually play out the start of New York, you can see that we get quite a big retracement and price actually disrespects London's high, right? And now this is where the daily bias, again, really goes hand in hand with the cycles, because if you didn't have conviction in price forming a bearish day, then when you get this reversal and price disrespects London high, maybe you lose all conviction in that downwards move. But because we know that everything else is pointing towards lower prices, we understand that, you know, we're still going to want to see a sell position, right? We're not going to lose faith in that bias. And also knowing the different daily cycles that could play out, you're going to be prepared for this. So this cycle, I've talked about it a couple times on my channel. It's called a New York reversal, where essentially New York disrespects London's high, and then we expect a reversal to the downside. Okay, so knowing those potential plays could actually happen. When you see this occur and you have the higher time frame bias, you're going to have conviction in the move lower, regardless of the fact that we have this big move against your bias. Okay, so from there, you would go ahead and try and sort out an entry. If we go on to the 3-minute, you can see that we do get this bearish order block formed, and price respects that here, and we actually respect a small FVG there as well, right? So potentially that would be your entry, and simply you're just gonna let price ride out to some kind of target. We take out this low here, and if I go onto the daily, you can see that we do form a bearish day just as anticipated. So you can see how well daily bias and daily cycles go together. If you really wanted to make it easy for yourself, you could find a daily bias and then just come over to this free flow chart that I made, which will take you step by step in identifying the daily cycles. So if you're trading London, you follow these steps, it gives you all the criteria, it even has key timings that you can use in the kill zones that I didn't put in the video that will increase the probability. And it also gives you the steps for the entries, right? So the same entries that I use are in here. And same for New York, whether you're bullish or bearish, you follow these steps, it will give you the criteria for either of the daily cycles, and it has the key timings again, and it has the entries again. So if you want that for free, I'll leave the link in the description. There are actually another 5 daily cycles that I use that I haven't spoken about on this channel. If you'd like to learn them, as well as 6 in-depth technical courses, live predictions, weekly outlooks, case studies, that is all within the Daily Cycles program. And if you're curious about that, I'll leave another link in the description below the link for the flowchart. So as always, I hope you found value in this video, and I'll catch you on the next one.